Thanks for clicking on the link on the appraisal section of the Awesome Rates and Mark Taylor Team video channel. We wanted to discuss with you today, for those of you watching this, be either real estate agents or consumers intending to purchase a home, we want to talk about the appraisal process. The appraisal process causes an awful lot of frustration for you, the consumer, and for our realtor partners. We're always worried about, can we get the value of the property? For a buyer, it's extremely frustrating to try and figure out how to make an offer on a property because they don't know what their value may or may not be. One of the things we want to talk about today is how the appraisal process works and why we have appraisals. Appraisals are a process where we send out an individual who has had a 4-year apprenticeship and several years thereafter of going out and assessing the value of a property. And not only that, when it comes to FHA loans, assessing the condition of a property. Appraisals are so important. One thing I want to leave with you right now in your mind is that an appraisal will set the purchase price of the property, not necessarily your offer. So a lot of buyers out there are confused. What do they offer for a house? How do I come up with an offer price? What is the property worth? A lot of people right now are worried about paying too much for a house. Can someone pay too much for the house, Kim?
No, because with appraisals in this market, especially, I don't know how many of you are aware of the new HVCC guidelines, the protection for you, the homeowner. Those came into place to prevent appraisals from being fraudulent or overvalued or done to benefit the seller and not you, the homeowner. We are now in a position of having to be compliant with the guidelines to look out for you, the homeowner. They are, or do we even talk to appraisers anymore? Do we know who they are?
No, that was the big change. A lot of congressmen during their new mortgage reform bill felt that we, loan officers and real estate partners, would put pressure on appraisers to get the value so that you, the consumer, ended up paying too much, which is how we got into the property crisis. For professional organizations, that was very difficult to do. But it doesn't mean that it didn't happen. So right now with the HVCC, which is the Home Valuation Code of Conduct that was put into place, it means that I, or Kimberly, cannot physically talk to the appraiser unless there is an issue. The appraiser cannot be coaxed to a value. They have to go out and make a completely unbiased and independent valuation of the property. That in itself causes problems because we don't typically get the fast turnaround that we used to, because appraisers aren't held more accountable.
It's more expensive.
And it's much more expensive.
It's much more expensive.
Yeah, a lot of you were frustrated who bought a house before and went, wait, why is it $450 now? They have to pay a company to manage all these appraisers when going out to appraise the property. It has to be ordered through a central location and a random appraiser picked. So when it comes to appraisals and problems with appraisals on properties, why are some consumers frustrated with the appraiser coming back and asking for repairs? Why are repairs so important?
Well, repairs are required to meet FHA guidelines. The property has to be livable. It has to be functional. It has to, every aspect of the home has to, technically it needs to be move-in ready. You can't move into a house that doesn't have flooring. You can't move into a house that doesn't have working plumbing. You can't move into a house that is leaking through the roof. Those are all things that are required per FHA guidelines, HUD, to be fixed and operational at the time of closing, which I think benefits the homeowner.
A lot of people get frustrated with it and say, I can't buy this house because it doesn't appraise out. That's a good reason. You don't want to try and put a square peg in a round hole, and that's what we're trying to do. The property, if it doesn't appraise and doesn't meet the condition for us to lend money for you to buy that home, that needs to be a big consideration whether you continue to proceed, and a lot of people get frustrated with that.
Right.
In this market with short sales and real estate owned property, it is difficult for a seller who has no money or a bank that doesn't want to spend money to do the repairs and make it move-in ready. So you as the consumer have to be prepared that you may not purchase that home, not through your fault, which is where they get angry. They think it's because it's their fault or because it's ours. Just the bank won't lend you money on a house that's falling apart, and you don't want to go in there and have these massive bills that could potentially come down the pipeline. So the other thing about appraisals that we need to address is when you're making your offer, when you're with your real estate professional, they're going to advise you at what a fair market value offer would be. If you have seen properties that are bigger and better for less value, then that would obviously tell you that that property, you shouldn't be offering the list price that they're asking for. You need to check with your agent and be guided by that. There's a calculation that your agent can do for you that shows the average list price versus the average sales price. And in most cases, you'll actually find that it's about 3 to 3.5% is what the house actually sells for versus what it was listed at. A key factor for you, because if you've watched our closing cost segment earlier,
right,
you'll understand the importance of having the seller pay closing costs. So if you're out there with your agent and you believe that the property is a fair price and you need your closing costs paid for, because that's what we're suggesting for you. Always try and get your closing costs. Or you need closing costs because you don't have sufficient reserves to meet the loan requirements. Then please don't be afraid of offering full price for the house. Or in some cases, you might even have to ask over full price, because at the end of the day, you always know that there is an appraisal by an independent appraiser who cannot be influenced by us, who has to come in at value. If the value doesn't come in,
9 times out of 10, the seller will reduce it to the appraised value.
Now, you as the consumer need to be aware of a renegotiation. Typically, the seller will come back and go, well, I'm willing to lower the price to the new appraised value, but I don't want to pay closing costs. Again, you need those closing costs, and you and your agent will have to make the decision, do we continue to counter and continue to fight for the closing costs? You'd be surprised how many times they fight back and we get all closing costs paid. Because you have to remember, if you offered $97,000 for the house and it was listed at $97,000 and you needed $5,000 in closing costs, the seller's going to net $92,000. If the purchase price came in from the appraised value, what the new purchase price needs to be of $92,000, the seller's going to net $5,000 less. If he doesn't take your offer, he's going to have to put it on the market at $92,000, and someone else is going to come along and ask for the same closing cost concessions. So it really is in the seller's best interest to take your first offer and match the new appraised value and continue to pay the closing costs.
Especially considering the fact that we are in a declining market, and it doesn't benefit the seller to take that property off of the market and relist it in a declining market. You had an offer for $90,000, it sits for 3 months, what's it going to sell for?
Who knows? Probably less.
Probably less.
Depends on the number of foreclosures. So some important considerations when you're making an offer. We wanted to put the making the offer process included into our appraisal video segment because the two are synonymous. Don't get confused. You are with a real estate professional. That's probably how you got introduced to us. Your real estate professional is an expert in this arena. Talk to them, talk to us, and they will be your guide. They can't tell you what to offer. They can educate you as to what to make an offer on. But do remember, don't be afraid to make an offer, because at the end of the day, we have an appraisal to protect you. You won't end up paying more for the house.
One last thing, Mark, before you finish. What's the only upfront fee we require?
An appraisal fee.
That is the only fee that I might ask of you to cover up front, because at the end of the day, whether you choose to buy the house, the seller chooses to sell it to you, Mark Taylor has an invoice for an appraisal that was done for $450. So we have to pay that invoice. We require you as the consumer that made the offer to give us that payment up front. No other fees.
Absolutely, and I say this with all humility in the world. Please remember, you don't pay to go to work each day. When you ask me to go out and order an appraiser, the appraiser has to be paid. They cannot waive it. It's illegal to waive it. So the money has to be paid up front. When we ask for the closing costs, we're going to get you that refunded when you go to closing, if there were sufficient closing costs asked for to cover that. If it is a private sale, we'll always ask the seller to leave a check for the appraiser on the counter so that you're not troubled with it. But it is our only upfront fee that we ask you to participate with.
Which doesn't obviously go to us. It goes to pay the appraiser for doing your appraisal.
Thanks for tuning in again. We'll hope to see you soon. And as always, we appreciate you very much. We love working with you and for you. And if you ever need to get hold of us, please feel free to reach us at our website, which is awesomerates.com or 602-361-0707.
Thanks.
Thank you.